What is going on today? I am going to talk about the top 4 things you need to get pre-approved to purchase a home. What is going on? Thanks so much for checking out my video today. Really quickly, I'm going to tell you the top 4 things you need to purchase a home and get pre-approved. So this is like if you're just starting out in the process, you're thinking about buying and you're like maybe probably a little nervous to even talk to a lender, and you're like, hey, like what do I need to do to get my stuff together, check out like what I need to pull out online and all that, and documents. So I'm gonna talk about all that really quick though. Before I start, if you can subscribe to my channel and also like, and if you like the video, comment below. From what I hear, good things have happened to people that like and comment on my page, and they just get blessed with good luck. Even more so if they use me as their realtor if they live in Northern Virginia. I've just heard that and seen that happen. Miracles do happen when people use me. Maybe I'm exaggerating a little bit, but you know what? Enough chatter about my wonderfulness. Let's talk about the top 4 things you need. Okay, so a lot of people get very nervous. They're like, I want to buy a house. And they're like, what do I need to do? And one thing they get stuck on, number 1, is you gotta have good credit. Now, you don't have to have like superstar credit, because one thing a lot of people don't realize, especially if like when you're in your 20s or your 30s, like you'll hear people say, well, I have an 800 credit score. Some of these people, they've had credit history for years, and so like an 800 credit score, you may be perfect. That's not even attainable until you hit a certain age. So like typically what I've seen is most people need a credit score around like 620 to 640, and it can vary if you're putting down a lot of money and all that, but you got to remember, if it's any lower than that range, then the lender, the issue is, looks at you as the potential borrower as a risky person. So what I would do right off the bat is I would go to like a Credit Karma or one of these things and get my credit report pulled, and I would see like what my score is. One thing though, that like another thing a lot of people don't know about, and I'll kind of go off these little side tangents because I want to give you guys as much information as possible, is that like those scores are not the same scores that the lenders get. They have a totally different score system. It'll be pretty close to it, but I've seen people be like, I have a 720 credit score, and then the lender tells me, no, it's 650 because there's something on there that the banks got, maybe that recorded to them that didn't get recorded to like a Credit Karma or Experian and all that. So just keep that in mind. But like make sure, like pull your credit and see what your credit score is. If it's below 640, don't be discouraged. You can get it up, like doing little things like paying a credit card down. I've done other videos about how to do that, but that is gonna be the very first thing. So get to know your credit score, and if it is lower than a 640, start working on getting that up. You can always like call a lender. I wouldn't go, this is just my personal opinion, I wouldn't go on like a Rocket Mortgage or anything like that. I'm not saying they're a bad company, and just like go online and fill it out and then see what they say. Like I would call a local lender or ask your real estate agent, like who do you know that's good? And they can actually pull your credit for you, and then they can kind of give you some quick advice. That's gonna be a lot better than just winging it and going online and then not getting like any advice whatsoever. Number 2 is gonna be proof of income and assets, right? So like you're gonna have to have some kind of like bank statement. So if you're somebody like, I don't know why in this day and age, you're carrying around a ton of cash, or you have, hundreds of thousands of dollars in Bitcoin, good for you. Like you gotta have show the bank that you have assets that you can get a hold of, because they look at it like, well, wait a minute, like what if this person lost their job the month after they bought the house? So they have money to carry across, this mortgage payment. Do they have accessible money for a down payment? And you don't need a ton of money. I've also done other videos, and we'll put a thing above where we talk about like how to buy a house with no money down. You don't necessarily need a ton of money, but you usually need about 2 to 3 months put away of like future payments and all that, like that you can go to, and the lender looks at it and says, okay, they're responsible with their money. And also you need to show proof of like bank statements. So get your last 2 to 3 months bank statements together. And then assets, go and print off, do you have a 401k? Do you own another property that you have a bunch of, equity in? Do you have, a Webull account with $200,000 in stock? Like the lender is gonna wanna know all that. And that's things they can actually present and look at when they go to get you pre-approved. Number 3, one thing that a lot of people like sleep on and they don't realize is like find a good area, right? Like look around before you get pre-approved and like drive around to different areas and like see where you might want to live. As dumb as that sounds, you may be like, hey, I want to move into this town. And then you don't realize the taxes are a certain amount of money, or the HOA fees and the condo fees are $400 a month. And all of a sudden that raises your payment up significantly, which downsizes how much of a house you can buy. So like before you even get pre-approved, like as dumb as that sounds, like I said, know where you want to live. Like a lot of people, I always say there's like a term in real estate that we always say, it's called buyers are liars. And what does that mean is like 99% of the time when a buyer calls me and they say, hey, I want to buy this house and I want to live here, they end up going somewhere totally different because they end up like looking at a house in a certain area and then they end up not liking the area, or it's too expensive, or it's not they don't like the schools, and they go to a totally different area. So I tell most people when they're like searching online and just looking, like keep a broad like area and look. Like don't judge every area and say, oh, you know, my aunt said that's a terrible area. Like pick a good area that you know. And like remember, if you're looking at condos, like you're going to have expensive condo fees. Or if you're looking at a neighborhood with a ton of amenities, you're going to have high up there amenity fees and all that. So like pick a good area that you want to be in and like just drive around and see if it works for your traffic schedule, all that stuff, like your work schedule. Another good thing is make sure they have high-speed internet. Like I've seen some people looking at areas and they work from home, they're on Zoom all day long, and the place doesn't even have high-speed internet and they can't even move there. So just definitely keep that in mind. Number 4, we're almost finished, employment verification. Believe it or not, this is something that ends up being a big nightmare sometimes and people don't realize it. So here's why, right? So let's say you just have like a normal job, when I say a normal job, like you have an office job or like you work in like construction or whatever, and you're not self-employed or you're not a business owner, like you're not like a bartender, or you're not a realtor like myself, or you're not like you own a construction company. You're gonna get a W-2, you know, like at the end of the year. So most likely your lender is gonna say, can you give us the last 2 years of your W-2s? So you say, here you go, you know, and people will usually say, well, you know what, I made 80,000 this year. Not really, because you really made 50,000 like after you paid taxes and all that. So that's really important to get together. And another thing is too, which believe it or not, as much as we don't want to say, is a lot of people will do things like they'll have a job, you know, and they're making, you know, I'm just gonna throw out a number, $3,000 a month, and then they're getting a $2,000 a month bonus, but then, you know, or overtime, and then when they go to get the employment verification, their current like employer won't put on the letter that they're making that overtime money because they're not guaranteeing that they will get that money every month. So then I've seen that hang people up before, believe it or not, or they don't mention that to the lender like, hey, I get a ton of overtime. Well, that overtime work is not guaranteed. So that can really screw you up sometimes. So definitely make sure, like talk to your employer and say, hey, look, if I need an employment verification letter, are we gonna include my overtime that I get and all of that? Another big thing that really screws people up, even like people like myself, and this has messed me up, is, you know, when you're self-employed, you get a 1099 at the end of the year. Now, they don't know anything when they give out the 1099 of what your taxes you paid, what your write-offs are and all that. So obviously, most people write off everything under the sun, so it shows they make a lot less money than what the 1099 was, right? Because they don't want to pay a lot of taxes to our good friend Uncle Sam. So what ends up happening is people will call me and say, you know what, like I made $200,000 this year, I want to buy $800,000 house. And I'm like, hell yeah, let's go, let's get in the car, $800,000 house, let's go. And then they call the lender and the lender goes, hey, you know what, like I just looked at their tax returns and they only made $50,000. And the person's like, well, what are you talking about? And the thing is, well, yeah, you wrote off, you know, that you went to Starbucks every day and you wrote it off, and you got your car washed, you wrote it off. And, you know, you went out drinking and you wrote it off and said your friend was with you. That was a business conversation, whatever else everybody does, right? And so all of a sudden, like your income is significantly lower because they're going to judge. They're only going to look at what the IRS is saying that you made. That's what they look at when they go to get tax transcripts. So like employment verification is key, and keep in mind, like the day or two before you go to closing, the underwriter for the bank, they're the people that at the end of the line when you're about to close on your loan, they just go through with a fine tooth comb, like they have nothing better to do, trust me. And they look for reasons why they're not gonna lend this money out, because it is a big risk for a bank, right? They're gonna actually request that your employer send them a letter saying that you still work there. So I've actually seen too, some employers be lazy and take an extra week or two to send this freaking letter. So like, just keep in mind, like ask your company, say, hey, what's the process for getting all that and everything. So these are just like 4 quick, easy tips that I wanted to go over. If you live in Virginia, give me a call. I can help you with buying or selling a home. And if you live anywhere else in the country, I can refer you to some top agents that will definitely help you out. And you can message me anytime with any questions. And comment below what else you guys want me to talk about. I like talking about real estate, even though I know everybody comes up and talks to me about real estate. Sometimes it drives me insane. It's probably why I lost my hair, but you know what? At the end of the day, I still love it. So ask me any questions. As always, I will see you at the top or from the top.